time. We will move from the first panel to the second at precisely 10:30. So I have asked all members to be frugal and quick with their questions. And I would ask our panelists for the first session perhaps to have one of the two panelists answer each question where possible, unless you have a particularly burning desire to come in on the same question yourself. And can I perhaps start by welcoming our two panelists, Andy Chamberlain and Kate Nichols, and perhaps ask them very briefly to introduce themselves, starting please with Andy.
Good morning. My name is Andy Chamberlain. As you said, I'm from the Association of Independent Professionals and the Self-Employed. I'm the Director of Policy there. We are the organisation which represents self-employed people in the UK.
Thank you, Andy. And also now moving to Kate, please.
Kate Nichols, Chief Executive of UK Hospitality. We are the national trade body representing all hospitality businesses from a single site independent right the way through to the national chains of pubs, bars, restaurants, hotels, coffee shops, visitor attractions. We have 700 member companies, between them 75,000 outlets. We were the canary in the coal mine that went first into the coronavirus crisis, and it looks as though we will be last out.
Great, thank you very much, Kate. And can I start with my first question directed to Andy, please? So just to zero in on this particular issue of the self-employed who basically operate through their own limited liability company, so particularly a personal services company, for example, who under the current arrangements, when it comes to working out how much furlough they may be entitled to, dividends are not taken into account by HMRC, it's just PAYE income. And as I think you've pointed out, Andy, in your submission to us, that PAYE income is often the smaller of the two amounts, as it were. Could you outline to us, firstly, why the PAYE income might be smaller than the dividend income typically, and also what your comments are on HMRC's assertion that you cannot include the dividend income because it's impossible to, or very difficult to differentiate between dividend income relating to self-employment activity as opposed to, say, passive investment dividend income.
Thank you. Yes. So you're quite right. The furlough scheme, or the coronavirus job retention scheme, which is designed mainly for employees, can be applied to directors of limited companies, someone working for their own limited company. But under the furlough scheme, you can furlough yourself, essentially, which means that you can't do any income generating work for your company. But you can get 80% of whatever you pay yourself as salary. But as you have quite rightly said, Chairman, a lot of company directors will pay themselves a fairly minimal salary and take out more money in dividends. The reason why they do that is because they don't know how much profit their company is going to make in the year. And so it's more sensible to pay themselves a small salary and then take out whatever they can afford to take out as the dividend. It is how people are advised to do things very often by their accountants. It's a little bit of a myth that this is to do with tax, because in fact, in recent years, tax has increased on dividends. So people do pay tax on their dividends as well. It tends to be about agility within the company. That's why people do it, so that they can ensure that they're not overspending. You're quite right that the Treasury have said that they can't include dividend income in the calculations for the job retention scheme, or indeed the SAYS scheme, the self-employed income support scheme as well, because they don't know where those dividends have come from. They have no way of knowing whether the dividends came from a share portfolio or from the profits of their own company. And I think that is true, that they can't work that out very easily. You'd have to do a paper trail, a manual check, and of course that would slow things down. So I understand that. But what we have been saying to the Treasury is, first of all, could they not adopt a pay now, claw back later approach? Because we have, according to recent ONS stats, 710,000 of these limited company directors. They are getting very little by way of support when compared to some other groups. And so they're going to need something. They're going to need some help if they're going to survive this crisis in the same way as we're trying to ensure others can survive it. And of course, they'll be the ones that we turn to get the economy going again on the other side of this. So it's very, very important that we do get support to them. And what we're asking the Treasury to do is to say, you've been very generous with some other groups and thank you very much. But is there not a way that we can relax the rules on this? And even if we do overpay someone, we might be able to claw that back afterwards.
Thank you. That's very helpful. Now, just to pick you up, though, because one of the suspicion here is, to a degree, that is the Treasury treating the self-employed in this context differently, because actually they see dividends as a part of tax planning, lowering the tax bill, and they're therefore less sympathetic to it. Now, that's just a view that is out there. But from what you're saying, you don't think that is the prime motivation for people to organise their affairs in that way. And would you therefore necessarily have a problem with with changes to future tax arrangements, whereby the tax advantages of taking dividends may actually be reduced relative to taking PAYE income? And secondly, in terms of the clawback idea, which I think is definitely an interesting one, it's something I think the committee will pursue with Treasury. One of the objections to that might be that people would overclaim, that there could be fraud risks associated with that, quite apart from the huge amount of time and effort that HMRC would have to put in to that process. And I just value your comments on that. So really on those 2 points, please.
So on the second point, on the clawback issue, of course, naturally, Treasury at this moment in time does not want to set itself up to have to do lots and lots of work of checking where, have they paid people the right grants, and have to do that later in the year when this crisis hopefully is behind us. And I can understand that, but I would have thought that you could deal with this pretty well by putting a question in whatever form it is that someone would have to fill out in order to get this grant money, and say to them, what proportion of your total dividends have come from your company profits and what from elsewhere? And those people that provide inaccurate results there, you could say to them, well, you could be penalised quite heavily for telling a lie on that form. And I would have thought that would ensure a pretty high level of compliance right from the off. But even so, yes, I think that there will be a risk that some people try to inflate their claim by saying that they've got dividends from their company when perhaps they got them from elsewhere. I mean, we're actually putting some research out into the field. I think it's going to go out next week. It's just taking us a little bit of time to get it together, to ask this very question of how many limited company directors actually have a share portfolio or receive dividends from outside of their own company, because I don't think that we know. It may be that that's a relatively small group of people, in which case surely it would be better to ensure that the majority can get some support, which we're broadly all saying they should do, and then we can deal with that minority afterwards. But let's not let those get in the way of getting support to all those that need it. And on your second question about the taxation, we think that the tax system for all self-employed people is far less than optimal at the moment. And we had a big problem with the IR35 changes, which were due to come in this April. They are now going to be in this finance bill, I believe, and be in place for April 2021. We're actually saying, well, hang on a minute, do we know that the economy is going to be in good enough shape by then to cope with that? Because clearly the government felt it wasn't in good enough shape now to do it. So let's not lock that in now. Let's wait and see on that one. I mean, also, we don't like those IR35 changes. So we have been asking for a fundamental review of the tax system for self-employed people, including those working as limited company directors and indeed sole traders as well, and saying, let's have a good look at this situation, because we now have more and more people turning to self-employment. And who knows what will happen after this crisis? There might be even more people in self-employment. There might be less, I don't know. But I think it's becoming clear that we don't have a good enough tax system for self-employed people. We're constantly arguing over whether they're really self-employed or not. Let's get something transparent that we're all happy with, and let's have a proper review of that, and then we can move forward with this issue, because this issue of tax and the self-employed is just dogged. It's dogged the sector for years and years.
Okay, I'm going to move on, but before I do, can I just ask you on the point about the clawback mechanism? This is an area where I think we're going to push Treasury as a committee. It'd be very helpful if in very short order you could write to us just to set out all the ideas that you and others have around how that might operate as efficiently as possible. And I'm now going to move to Angela, please.
Thank you, Chair. Andy, The government have said that its self-employed income support scheme will cover 95% of those who get their majority of earnings from self-employment, but the Institute of Fiscal Studies estimates that just 62% of all self-employed individuals will be covered. And certainly from my email inbox and my experience up in Wallasey, it seems to me that this scheme is missing rather more than 5%. What's your impression?
Yes, we would say that the IFS have probably got that one more right than the government. I think that those stats have been slightly twisted. So when the Chancellor said that, he was referring to the fact that the scheme will exclude those who earned over £50,000 in recent tax years. They are in the 5% bracket. But the scheme not only excludes those, it also excludes people who have only been self-employed for 1 year or less, because you had to have a tax return file for 18-19. And if you only started being self-employed since April 2019, you won't have done that. So that excludes a lot of people. We think at least 1 million people, because that's, and there are 5 million self-employed people in the UK at any one time. And roughly speaking, you've got quite a lot of churn. So there's a new 1 million, and there was 1 million who were self-employed before who are no longer self-employed. So that does exclude a lot of people. And then there's the limited company issue. The term self-employment, some people who work for their own limited company don't recognise that term as referring to them, but others do. I mean, broadly, we're talking about people who work for themselves. And the ONS came out with some stats yesterday saying that there was about 710,000 sole director limited companies out there. So you can see that we are getting to a very large number of people who are not included in the state scheme.
Yeah. Okay, now Kate Nichols from Hospitality UK, payment of the self-employed income support scheme is expected in June, but we've had reports from many self-employed people just saying that their work has dried up, their income has dried up completely. How do you think this delay will affect people, and is there sufficient support for them in the interim?
Well, I think you're right that although schemes have been developed at pace, there is a delay in money getting through to people who are genuinely self-employed. As Andy's just explained, there's a lot of people who work for themselves who aren't classified as being self-employed under these schemes, and we have only a small number in the tourism and hospitality sector who would be genuinely classified as self-employed. It is undoubtedly a problem that you've got a delay in payment. It's the same problem that you've had with the delay in payment to a lot of the companies for the furlough and for furlough payments for those limited company directors who work for themselves but are able to furlough part of their salary. And it's quite clear that Universal Credit, while there and a welcome support mechanism, it is struggling to cope with the volume of applications that we've seen from those people who are not getting a support from another route. But it is a very small proportion of the tourism and hospitality sector that is affected by this.
What about freelancers? Either or both of you, do you think that there's enough support for freelancers? I know that I think, Andy, you put forward a sort of temporary income protection fund scheme for your members. It might be a better way of dealing with the problems that freelancers have, because they are an increasingly large part of the sort of pool of self-employed in the labour market, aren't they?
Yes. So we did indeed. We sort of coordinated a campaign, and we were calling for something. We were calling it the Temporary Income Protection Fund for self-employed people and for freelancers, anyone working for themselves. Now, what we got was the SAYS, that's the Self-Employed Income Support Scheme. And we have to say, we were very grateful to the government. It's a very generous scheme, I think. It's unprecedented, in fact, if you look at what it's actually doing. But it's got very sharp edges. So if you fall into that box, then that's pretty good. But if you don't, you get nothing. So if you earn 1 penny over 50,000, you get nothing. If you started just last year, you get nothing. And if you're working for your own limited company, you get nothing under that scheme, though you might be able to get something under the JRS. So, what we're saying is that's brilliant. Thank you very much. But can we now look at those who are clearly falling through the gaps and do something for them as well?
Thank you very much. Kate, do you just want to add anything to that?
I'd agree with Andy. If you fall within the schemes, then the scheme parameters, it works well, but there are going to be individuals who are going to be left with no other support other than the universal credit, and we need to make sure whether they are people who are genuinely employed by hospitality businesses who can't be furloughed or have found that they're not furloughable, or it's the freelancers, or it's actors or directors of limited companies, that the universal support network is there, the universal credit support network is there and is properly resourced to process those claims.
Thanks very much.
Thank you very much, Angela. Could I move to Rushanara, please?
Morning. Good morning.
Yes, we can hear you.
Hi, great. Thank you very much. So I wanted to talk about the furloughing scheme. So as we all know, the government has extended the payroll date from which furloughing people could be eligible to the 19th of March. Can you set out how many people are still going to be left out despite this extension, which is obviously welcome, and what you think the government should be doing to address the problems that will remain for those who are still not going to be eligible? Certainly my inbox and Twitter feed has been bombarded, as I'm sure with other colleagues in the Treasury Committee, by people who are still not eligible. Thank you. Perhaps Andy could start.
Thank you. Yes. Very recently, something's been brought to my attention on the furloughing scheme, which I'm still sort of looking into, but I'm going to tentatively raise it here anyway, which is that, so I was talking about limited company directors can furlough themselves and get the 80% on their salary only, which we think should be extended to look more widely at their total income. But anyway, there is a suggestion that because some of these directors might only pay themselves annually, their salary gets paid in one annual payment, and that might be after the 19th of March, which meant they weren't on the payroll at the 19th of March of this year.
Do you have a number? Do you have a number? Do you know how many people, what percentage still be left out?
I do not know that information, because this is all quite new information to me. This scheme was just launched yesterday, of course, and so I just think that there is a danger that even those that want to do that just for their salary part may be excluded on a technicality, and we're going to ask HMRC to have a look at that.
Okay, Kate, did you want to add anything to this point about the
I mean,
and how many are left?
The extension of the scheme at the end of last week and the confirmation that it was going to be for those who had been in the business from the 19th of March was incredibly welcome. And that brought into scope quite a large number of our seasonal staff in hospitality and those who were weekly paid in particular, who would not otherwise have been covered. However, the Treasury guidance and HMRC guidance introduced a new criteria over and above what had been previously announced in the guidance that came out on the 27th of March. So the 27th of March, the HMRC guidance said that you had to be on the payroll, you had to be employed by the company, you had to be contracted. And then at the end of last week, on the Thursday, when the extension was made to the 19th of March, there was a new requirement imposed, which meant that you not only had to be on the payroll, you had to have participated in an HMRC RTI event. So you had to have had a pay slip that went through, which meant that on the one hand, we increased the number of people that went into the scheme because they had had an RTI event before the 19th of March. Correspondingly, quite a number of people in our businesses who had previously been classified as furloughable, they'd been on the payroll at the end of February but hadn't had an RTI event, are now excluded. So we estimate that there is somewhere between 350 and 500,000 people within hospitality who are potentially still missing out, either because they thought they were furloughed and their companies have paid them and they now can't be claimed for, or they're still missing out because they haven't had an RTI event.
So basically, the government has the steps the government's made are welcome, but in your sector, between 350 to 500,000 are still not going to benefit from this scheme. And so would you say that actually, rather than all of us taking days and sometimes weeks to try and shift the focus on those who are left, that needs to be done quickly so that those people who are not eligible can be supported as quickly as possible?
Yes.
And I have one supplementary for you, which is to do with the 50. My understanding is that in your sector, people were receiving 50% as opposed to 80% because of this issue around service charge. Could you just explain that?
Yes, so just to take the first one, yes, it's really vitally important. And I think in particular, I would direct the committee's attention to those people who genuinely thought they could be furloughed because they'd started in the businesses before the 28th of February. The companies were abiding by the 27th of March guidance that said they had to be employed on the 28th of February, and now are falling outside because of this RTI event trigger. I think there might be a way of working with HMRC to allow them to be claimed for, where there's demonstrable proof that they were in the business, they just haven't had a pay slip. And I think that that's probably about 250,000 of those workers that I talked about earlier. In terms of service charge, this will only affect a small proportion of the sector, but it's critical for hotels and fine dining. This is where a service charge payment is taken. There is a guaranteed minimum payment that goes out from the company back to the workers, and in those businesses in hotels and fine dining, it's 40 to 50% of salary that people will not now be getting. And this is an area where we've worked with the union in our sector to try and make sure that we can get it a fair proportion. The guidance currently states that you can include payments where there is a contracted guaranteed obligation to pay. Some service charge arrangements will be covered by that, but a large number will not. And it means that for some of the lower paid people in our sector, they will be receiving 60 to 40% of their salary and their average earnings over the course of the previous year.
So in conclusion, there are still hundreds of thousands of people left who are not going to benefit from the extension to the 19th. Would you argue that actually it should be extended? These gaps should be filled as quickly as possible, because that's a lot of lives, that's a lot of families who are still not going to be supported, and these are often people who are not in who are in low wage jobs that need support urgently.
Well, for a large number of those that are going to be excluded because of the change in the guidance, that affects a large number of our salaried staff. So they are not in the lower paid category. Their businesses and their companies are looking after them. But I think there's a pragmatic solution that can be reached to make sure that the guidance is consistent and that they can hope.
In lower paid?
Sorry to interrupt, Rich. I'm really sorry to interrupt you. We're running over a little bit, and I'm keen just to.
Thank you very much.
Thank you very much. Steve, I think you wanted to very quickly come in on this issue of Tronc.
Yeah, very quickly on Tronc. You've been clear that, Kate, that it's 40 to 50% of people's incomes, but give us a characterisation of the level of those normal incomes. We're not talking about high-paid people here, are we?
No, we're not. Invariably, those are people that will be earning £9–10 an hour as a basic salary, and then they are earning up to £20 an hour if you add in Tronc and service charge payment.
Thank you. So it's a very important cultural point there that we need to look after people. And very quickly, Andy, can I just ask you about the Back2 campaign for creative professionals who I'm very aware of in my constituency? They're telling me that they normally move from short-term PAYE contract to short-term PAYE contract. And they would like HMRC to say people should be furloughed by their last PAYE employer. Have you taken a view on that situation, please?
I mean, that isn't one that we've taken too much of a view on, because that does tend to refer to employees, and we're talking about the self-employed people. But I am aware, yes, that there is it's been suggested by government that people should take on staff if they did let them go, just so they can, if you were on the payroll at the right date, you can therefore access the scheme, the job retention scheme, via that previous employer. I think that sounds entirely sensible, and I know that there are some people who work in that way. It tends not to be our members, but I think for those that do, if you get into that scheme, that'd be great.
I've got to be brief, but can I just press you to have a look at Back2, because I think those people consider themselves self-employed, but they're in another slightly odd category. So I must stop there, but thank you very much.
Thank you very much, Steve. Could I now turn to Felicity, please?
Good morning. My first question is actually on the Sybil loan scheme, and I just want to hear hear the experience of your members. I personally am a little frustrated by the volumes that the banks are lending, and I do hear anecdotally that the process is often just too slow, too cumbersome, and also some of the banks are putting restrictions on, for instance, which industries they will lend into. So maybe I can ask both of you in turn. Let me start with Kate. What's the experience of your members?
Well, we've just conducted a survey of our members. Over half of them have applied for a loan. 18% so far have had a loan approved. That figure has dramatically improved over the last 2 weeks since we've had changes to the eligibility criteria for CBILS, which removed the requirement for it to be a lender of last resort, and also a requirement to have no further asset or security. So that has significantly increased the availability. However, 58% are still waiting for an answer, and it is only this week that some of the smallest companies in our sector have received an answer from their banks. And we have heard, as you said, that despite opening up the eligibility criteria 2 to 3 weeks ago, there is still the viability test and there's still the appropriateness test that banks are allowed to go through. And we do have 1 or 2 banks in particular that are saying their normal commercial lending criteria are such that they will not lend into the hospitality sector full stop. So that causes a main problem if that is your major lender and it is your current bank. And there just does seem to be no flexibility. That is a blanket approach that is. And then over and above that, we have the issue of some of the EU state aid rules, which are hampering investment and lending into the hospitality sector, particularly where we've got startup and high growth companies who are in rapid rollout phase and have accumulated losses that are brought forward. So otherwise they're a viable business, but clearly opening a new hospitality business is intensive, and you run at a loss for the initial year. So that is proving to be a particular problem too. We have no experience yet of members having approvals or approvals in principle from the new large CBILS scheme. And we are seeing now that some of the largest businesses in hospitality are accessing the Bank of England CCFF scheme, but that has been equally challenging to meet the criteria. At the moment, I think there are only 2 or 3 of the larger businesses that have been able to access that.
Andy?
Thank you. Yes. So on the coronavirus business interruption loans or CBILS, overwhelmingly, I have to say, our members have said to us they don't want one because there's no light at the end of the tunnel as far as they can see for this economy. So they don't know when they'd be able to repay a loan, and they're nervous about taking on that debt. These are very, very small businesses. However, there are some who have looked into it or tried, and the feedback that I've had is broadly that there are barriers, and these are some of them. One person that we've spoken to works as a property developer and was told that they are not applicable for the loans because real estate businesses are not included. We've also heard, I would echo what Kate has just said about, we've had problems where if a company has made a loss, not even in the last year, but the year before that, they've been denied a loan because they were loss making in recent history. And of course, business does make losses, particularly new businesses, as Kate quite eloquently said. A new business will run at a loss, so that can be a problem. And then there are some particularly sole trader businesses which don't have a business bank account. They use their personal bank account. We actually advise people they should get a business bank account. But if you don't have a business bank account, you can't get one of the CBILS as well. So, I mean, perhaps the CBILS aren't for those people, but that's our experience so far with the CBILS.
Okay, thank you. And just one other question, and this relates to the grant scheme. So the Small Business Grant Fund and also the Retail, Hospitality and Leisure grants. One, just how are your members finding the distribution of money from local authorities? And secondly, and this is of particular interest to me, I represent a central London constituency, is that clearly the grants are tied to having a rateable value below £51,000. And there are very, very few businesses in my constituency that have those rateable values. However, they've got the same cash flow pressures as every other business. So maybe if I come to you, Kate, on that, I'm just conscious of time. So maybe I'll just come to you, Kate.
Yes, of course. I think you've quite eloquently described the problem that we have. This committee in the past has looked at the challenges of the business rate system and the fact that you get a high rateable value if you are in a high street premises, which is attracting a large number of footfalls. So across the UK as a whole, 71% of hospitality business activity takes place in a premises that is a rateable value of £51,000 or more. So it's not necessarily the case that that is a good way of targeting to small independent businesses. You can have small businesses that are operating from a very high rateable value threshold premises. And so a large proportion of hospitality will be excluded from that, not just in central London, but a large number of other city centres, and equally some small independent rural community pubs are also finding that they're above this threshold. So we know that there are 10,000 pubs outside of 51,000 rateable value, but in hospitality as a whole, 2/3 of our members have not been able to receive a grant for some or all of their premises because they fall above that rateable value threshold. You asked about the money coming through from local authorities. It is a Parson's egg, I would have to say. There are some local authorities who have been fantastic and who acted very proactively. As soon as the government gave them the cash at the end of March, they were distributing them out to the businesses in their areas that they knew had a rateable value below the threshold. There are others who are still waiting to have that money distributed to them, even though they have had to apply online, have proved their eligibility and have made an application. So I think that there is a degree of difference across local authorities as to how they're approaching that. And the pressure is being applied, we know, from a central level. And the business department has been very, very good when we've raised cases and concerns with them about working with local authorities and explaining that they do have discretion to provide those grants more quickly or to businesses that are on the cusp of eligibility.
And you would just recommend that we get rid of that £51,000 threshold and give the grants to all businesses?
That would be my recommendation in hospitality, given that we know that hospitality is most severely affected. We know that it will be the longest affected because we will be one of the last businesses to come out of lockdown. That would be the simplest way of getting cash. And also highlighting that I've just done with the loans, hospitality finds particular challenges in accessing some of that government loan finance. So given the high cost pressures of rents, etc., the rateable value grants are a very quick and easy way of getting cash to those businesses. And for many of them, that is all that they need in order to get them through and bridge the cash flow that they've got. So if we scrap that rateable value threshold, it would help immeasurably.
Thank you.
Great, thank you very much, Felicity. Could I go now to Alison Thewlis, please?
Hi, good morning. I've got a couple of questions about insurance and the impact that that's had on businesses, and I think I'll direct these to Kate first, if that's okay. The FCA has ordered insurance companies to pay out in their claims either in part or in full when it's clear that the insurer has an obligation. Can you tell me a bit more about your own members who thought they had business interruption cover for pandemics or infectious diseases and have since found out that they're not covered?
Yes, this is one of the big challenges that we faced, because lots of our members will have had quite expensive bolt-on cover, both for pandemic or notifiable disease, but also for prevention of access to their premises. And in neither case are they finding that they're able to make a claim. So obviously general business interruption insurance won't cover you for something like COVID-19, but where people have taken out these bolt-ons, there was a legitimate expectation they may be able to claim. 71% of our members have already had their claims rejected. Only 1% have had any success. And 62% of our members have tried to make a claim against these. So we have had lots of feedback from insurance companies to those members saying that isn't the way the insurance policy was designed to work. We've had people saying that the government mandating closure of their premises is not a competent authority to close the premises and qualify for restricted access. And we've had others saying that you need to have a case of COVID on your premises to qualify, or it needs to be within a mile radius of the premises. So I think that there is a common sense approach that needs to be adopted to look at what the common clauses are and to identify what might be a legitimate claim where people have got coverage. But it's quite clear that there's a reluctance to make those payouts and assess those claims. The government intervention last week was extremely helpful because it did say, please pay out at speed, but it doesn't deal with the issue of wriggle room on small print.
So do you think that the letter from the FCA has had any effect?
I think it's too soon to be able to tell, to be honest. Certainly, we've seen some of the loss adjusters start to be appointed now and to look at claims with a little bit more alacrity, but it won't overturn the fact that, as I say, 70% of our members have already had a claim rejected, even though there is a prima facie case for them being able to be covered, even if it's just for the lesser amount of, I can't get access to my premises.
That's really shocking in terms of the figures there. I've had quite a lot of this in my own constituency as well, but to see that played out across hospitality businesses across the country, that's really quite shocking. You'd said earlier that the hospitality business was the first out and will be the last back in. Do you think there needs to be any additional support given to allow that to happen, and any different measures than have already been outlined to help support the industry?
I think that, you know, clearly the health of the nation, the health of our customers, the health of our teams has to come first, and therefore we would welcome the opportunity to work with the government on a pragmatic and planned phased approach to reopening that allow that to happen, and also to work on putting forward the proposals that would allow businesses to open safely. However, with social distancing restrictions in place, we know that businesses are only going to ever be able to open at about 30 to 50% of their normal revenues. So I think the key will be to make sure that while we work with government to maintain social distancing in our premises, we have that ongoing support. And the key for us will be a continuation of the furlough scheme for those businesses that are either required to remain closed for longer beyond June, if that is the case, or those businesses that are only able to open at half volumes. And I think, as I said earlier, the key for us as well would be an extension of those hospitality grants to reflect that as well. And then the final element that will need to be addressed is, what do we do about rents? Because while it was only a 3-month issue and one rents quarter, there is a need to look more holistically at rents for hospitality sector, so that the businesses themselves, the lessees, but also the landlords and the lenders are all resolved in a chain. And we have a debt enforcement moratorium to make sure that people are protected from enforcement, but there will need to be legislation to back that up to make sure that you can have that pause in the rent process. Otherwise, we will have done all of this for nothing, because the businesses won't be able to stand back up themselves when we remove the support.
Okay, thank you. And Andy, are there any particular insurance issues that your members have been facing?
Tend not to with those insurance products, though I am aware of the big problems in that area. But I would just like to echo what Kate just said about rents. That is the one area where we have heard big problems, where landlords and tenants, business tenants and business landlords have not been able to come to agreement on what's going on. People can't access the buildings, they're still having to pay rent. Who's right, who's wrong? They're coming to people for advice. No one seems to know. I think that some sort of guidance and probably financial support into that specific area would be very much appreciated.
Okay, and would that concern the likes of business centres and things like that?
Yeah, business centres, work hubs, as well as people who just rent a very small office. Self-employed people might do this. They can't get into the building. The landlord's not giving them a break on the rent. There's no money coming in. There's lots of disputes which are lined up, really, and it's going to be very disruptive in that sector. I think that some guidance and some financial support there could ease that burden.
Okay, thank you.
Thank you very much, Alison. And going now to Anthony, please.
Thank you, Chair. And my questions are primarily about hospitality. I just want to follow up that question about rents, because I have quite a few pubs in my constituency who are being required to pay full rents by the pub landlord, and they're worried about building up huge debts at the end of it that they won't be able to pay off. What specifically would you like to see, Kate? Would you like to see the rents cancelled, cut back? Because obviously, from the landlord's point of view, it's their income as well.
Well, I think this needs to have, as I say, a government-backed intervention, because we do need to have legislation to require this to happen. So the government approach, when they legislated to introduce a lease forfeiture moratorium, the suggestion was there should be a deferment of those rents for 3 months. We know that that's not happening across a large swathe of commercial hospitality, not necessarily the pub companies.
But even if you defer the rent, you still end up with a big debt at the end of it that you may not be able to service.
But you do need to then make sure that you have that pickup, that sort of timeout across all of the rents, so that you can look at the landlord's debt as well. And we need to restart the rent process when we come through. So one of the options that could work is to have that breathing space for 6 to 9 months. You restart the rents and you restart the landlord's loans, but you do need to have some intervention, as Andy said, because if the government loans can't be accessed by real estate companies or banks and finance, you need to have that protection. At some point, there needs to be an injection of capital to keep that going. But I think if we don't get a resolution at a global level, if you rely on landlords and lessees to sort it out individually themselves, it will be a bloodbath come June when we have the next quarter rent that becomes due. So you do need to have that protected space. We would recommend that as a matter of urgency, the government extends that lease forfeiture moratorium in length and also extends it to be a general debt enforcement moratorium, because as a result of not being able to pay rents in March, a large number of companies in hospitality have already faced statutory demands. We're already seeing the first threats of winding up petitions being waved around, and a number of landlords have reached very quickly for legal resolution. So the government does need to act very quickly on this one.
Have you got any idea of what proportion of hospitality outlets, so pubs and restaurants, will be in a position to reopen at the end of this? Because I certainly fear that an awful lot of them are simply going to give up, as it were, and they end up with so much debt, so they're not going to be able to come out the other side, despite the government support.
It's difficult to be able to put a figure on that, because at the moment it's very difficult to know at what time they might be able to reopen and under what conditions. And actually it's the social distancing restrictions that you might put in place within the outlet that will determine when they can reopen and how quickly they can start to build up some return to revenue stream. I think there is undoubtedly going to be the case that we are not going to be able to save every business, and we're not going to be able to save every job within hospitality. I think that's partly a fact of life, but also I think that we will come out at the end of this with a reduced estate. So I'm not sure you will lose companies wholesale, but I think you will lose premises and they will need to contract. If we get the kind of intervention we're talking about on rents and support on that rental process to be able to take the unpaid rent and add it on to the end of the lease or add it on to the end of the loan rather than facing a mounting debt when you come out of this, then I have every optimism that we will be able to return relatively quickly with almost full strength in the sector. But if we don't get that intervention in rent, if we are forced to remain closed until Christmas, then I think you could put a third of the sector at risk.
One of the other questions that I've had in my constituency has been from companies working in the supply chain of hospitality. So these are the food suppliers to restaurants, the drinks wholesalers, events management companies that organise events that are then put on by other people. They obviously don't get the direct grants, the £25,000 grant. But they obviously have access to other forms of government support, and the furloughing primarily. Do you see particular trouble in that supply chain for the hospitality industry, or are the other government measures, are they sufficient to keep them going?
I think that the rest of the supply chain doesn't have the challenges of accessing the Sybil scheme and the loan schemes that hospitality seems to have because of the problems that I've outlined earlier. And obviously the best way of helping that supply chain is to make sure that the hospitality operators are supported, can stand up again quickly when we are allowed to reopen, and that we have that phased and pragmatic approach to reopening and support through the reopening period. Some of our supply chain has managed to divert its resources elsewhere, but that's only a small proportion. And it is undoubtedly the case that hospitality is made up of thousands of small independent businesses who in turn rely on thousands of small independent businesses around the supply chain. So I think making sure that the government works at a holistic level when we come to look at how do we restart the economy. We restart the supply chain businesses first, we provide the support there to get them back up and running so that the businesses, the operators themselves can stand up very quickly. Because when we've done the initial research, it will take about a week, maybe 2 weeks to reopen a pub or a bar that's been closed or a restaurant, but it's a further 2 weeks behind that for the supply chain to properly stand up. So if we can make sure our supply chain stand up quickly, we can reduce the time until the businesses, the hospitality businesses become profitable again and can prioritise paying their suppliers. And clearly it's all interlinked with the rental piece, because if you are being told quite categorically by banks that they will lend to you, but you shouldn't really pay your landlords, you should prioritise paying your other creditors and your staff, then you need to follow that through. So if we can resolve and get a breathing space on the rents, that will allow the hospitality businesses to prioritise their suppliers.
That's great. Thank you very much.
Great, thank you, Anthony. And I think that concludes questions from the other members of the committee. But perhaps, as we've just got a couple of minutes in hand, I could just ask a final question to both of our witnesses, which is this: that there's clearly been a huge scope in terms of the measures that the government's come forward with. It's all happened at considerable pace. There have inevitably been a number of hard edges, and when we went out with our call for evidence, there were a whole host of issues that were presented to us. We've started to narrow those down, and I think we're keen now to really focus in both on those areas where it matters most to the self-employed and those in business, but equally where we suspect that government can, in terms of cost and practicality, make further improvements. So my question to both of you, and perhaps I can start with Andy, would be if on the basis of need and the ability of the government to deliver both those metrics, which one or two things would you suggest that this committee continues to push on? Andy.
We'd like to see more support for limited company directors. That would be the group that we think at the moment is largely excluded from the schemes that have been announced. And even with the furloughing scheme, which only gets them part of their income back, there's a few question marks over how the furloughing works if you're a limited company director, and that's not very clear. So there's problems there. So we'd like to see that addressed and for dividend income to be taken into account. And probably with the SAY scheme, if there was one thing I'd like to, I would say, could we allow people who are newly self-employed to get their tax return in for the last year, which ended just a couple of weeks ago, get that tax return done and in so that the government could calculate a grant under the SAY scheme based on that new information. The government say they're very worried about serious fraud, and I think that may well be a very, very legitimate concern, but is there something that we can do to mitigate that risk and ensure that those people who we do really want to get this grant money to can get the grant money?
Thank you, Andy. That's very clear. And Kate, if I ask the same question, but avoid duplicating the asks that Andy has made, please.
Yes,
thank you.
I will certainly. If we're looking at what tweaks need to be made to the existing schemes that are out there, then I think it is an extension of the hospitality grant scheme and removing the rateable value threshold, and also further tweak on the Sybil scheme and the large Sybil scheme to make sure that this an undertaking in distress, the EU state aid restriction, can be amended. We believe that can be done and taken out of Sybil, and that would certainly increase access for a large number of businesses, including tech startup as well as hospitality. And then in terms of focusing going forward, particularly around the restart, making sure that the furlough scheme is extended for longer for those businesses that need to remain in close down, and picking up the point about rents. How are we going to provide access to a solution on rents that resolves it? Otherwise, we will have a bloodbath, as I say, across a large part of the economy that needs to be looked at. So I'd split it into those two of tweak what's there already. I think the package is comprehensive. It is unprecedented. Two minor tweaks, and then focus on maintaining the support to get the most affected businesses up and running again as quickly as we can.
Great, thank you very much, Kate. And can I thank you both for the whole committee, actually, for all the input that you provided to this session. I think it's been especially useful at this particularly difficult time, and also at a time where we're asking and expecting government to move very quickly. We will certainly continue to press very hard on a number of the issues that we've discussed today, and take particular notice of the points that you've made in the answer to my last question here. So thank you both very much indeed for